6.46%. Remember, is the inflation number. That's a significant increase to what we're expecting. So there's been an expansion. You were expecting it to actually come down to around about 6%, but it's way ahead of what the street was expecting. 6.46, a clear reaction coming on the equity markets as well, is what we've seen. Quickly, I'll just correct what we've picked up. It's 6.46% is what the inflation numbers actually come in at as of right now. And what the market or what the street was working with was roughly around 6% odd or so. So this is a significant increase in what we've actually seen in terms of the data itself. Remember, this is the WPI that we're talking about. CPI will be released in the evening. But so far, the WPI print isn't looking that encouraging at all at 6.46. Saloni, clearly, once again, you haven't got much comfort coming in on the WPI front.
No way, Priyank. If you look at the higher estimate, that got it bang on. 6.46% was the higher end of the estimate of the Bloomberg poll. Now, if you look at the August number, it was 6.1. It's coming at 6.46. The August number clocked at a 6-month high. So this is way above what the August number was. Not a comforting figure at all, given the fact that we are entering into the monetary policy in the next couple of weeks. And RBI, this is one number that RBI very closely watches. We have CPI number releasing in the evening, not giving comfort factor to RBI at all in terms of tinkering with the rates. So it will be very interesting to watch which way the RBI governor goes, given the recent commentary. He's already at 6.1% said that it's way above the comfort level, way above the threshold level. And given the fact that from 6.1% expansion, it's come to 6.46%, way above that level, this will be not a comforting number for RBI.
So, Rani, since in the meantime, while you go through the internals, I just want to quickly pull up the currency as well. There's been tremendous weakness here, 61.3. So clearly, the currency market's not really liking this print, is what we're seeing right now. Look at that. There's been a one-way move on the currency markets as well. The equity markets also tumbling a little bit. You were holding on to gains of roughly around 3 to 4/10%. They've lost all of that. Nifty now trading low by around about 7 to 8 points is what we're seeing in terms of the kind of move that we picked up. Sensex also has moved into negative territory, is what we're seeing right now. Primary articles inflation is coming at around about 13.54 is the kind of reading that we've actually picked up in terms of the primary article reading itself. Nonetheless, Samiran Chakraborty, from Standard Chartered Banks, joining in. Samiran, afternoon, and thanks for joining us. What's the first take as far as the inflation figure is concerned?
Well, we were expecting something of this sort, but obviously the big focus is that the primary inflation is very high, particularly the food inflation continues to be very, very high. And that's why even while the manufacturing inflation is coming down or holding steady, there is no respite from the headline inflation number abating.
Right, just to recap the breakdown also, Samiran, primary articles at about 13.54, so that's inched up from what we saw around 11% last time around. Your fuel, power and light inflation has come in at about 10.08%, and really the food part that we were just talking about, food inflation rate still at 18.4%. That continues to remain high and should be the biggest concern at this point of time. Samiran, in this breakdown, how are you reading into all of this data? Manufactured products inflation rate at about 2.03. But what would be the biggest concern for you right now? Food inflation?
Yeah, definitely. And food inflation is something which seems to be baffling every one of us, that why even with a very good monsoon and very good agricultural production, food inflation continues to be so high. And within food also, it primarily seems to be the vegetable price inflation, which is doing the maximum damage. So in our view, probably in the next 3 months, this vegetable price inflation will correct, and that should bring down the food inflation component as well. But at this moment, this remains a big cause of worry.
What is the expectation in terms of the trajectory for inflation then, Samiran? We were expecting it to be around 6% now. In the coming few months, at what rate can we expect it to cool off if it does? I mean, of course, a lot depends on the way the food prices go, but still.
Yeah, I mean, apart from the food prices that we are talking about, I think the other unknown element really is that to what extent fuel prices will be adjusted to reduce the fiscal subsidy burden. We were anticipating that we were going to get some kind of a 3 to 5 rupee hike in diesel price to bridge the gap. Since we haven't got it as yet, possibly that's some respite. But even without that, and with the very strong base effect of last September 5 rupee diesel price hike, we are still seeing fuel price inflation at more than 10%. That's something which is worrying me a bit. Also, manufacturing inflation has headed higher a bit from 1.9 to above 2%. So overall, we are expecting the inflation trajectory in the near term to inch up, maybe towards the 6.5 to 7% mark. Because we must not forget that on manufacturing side particularly, there is a strong base effect of last year which could take inflation higher. Once that 6.5–7% is reached by the end of this year, we should see some cooling off after that.
Samiran, what's the thought as far as food inflation is concerned? Because on the back of the kind of monsoon that we've got, you have a lot of cheer coming in there. How will this actually augur for the next couple of months? What are your thoughts in terms of the expectations for food inflation?
We are expecting that the food price index itself needs to correct now. Without that correction, it's impossible for these inflation trends to come down. So actual food prices needs to fall. The good news is that probably even in September, from the first half of September to the second half of September, some of the vegetable prices have corrected. If this trend continues in October as well, then possibly when the October print will be out next month, we will see some correction happening. But yes, at this moment, the 18% plus food inflation remains a significant concern.
So the other obvious angle from here is what we've picked up on Friday in terms of the IIP number, which was also somewhat of a surprise at 0.6%, and what we're looking at in terms of the kind of number that we picked up on the inflation, which just doesn't seem to be cooling off anytime soon. What does this mean from the RBI standpoint? How would they be viewing it?
Well, our sense is that since the WPI is above 6% and we are expecting the CPI also to be out later today at 9.5, 9.6%, if that's where CPI prints and if we are seeing WPI still above 6%, would probably mean that RBI's bias will be towards inflation fighting, and we will get one more rate hike on October 29 policy. Yes, growth is weak, and RBI governor in his recent speeches have acknowledged that there is a significant negative output gap, which is putting disinflationary forces at work, particularly on the manufacturing inflation side. But the headline inflation remaining so high, RBI will probably not have too much choices but to go in for another rate hike on October.
Before we let you go, Samiran, very quickly, what's the expectation for CPI today evening? What are you working with?
We are working with something like a 9.6, which is almost similar to where the market is. The key again is going to be the food price inflation, and in the last couple of months we have seen some divergence in CPI food inflation from the WPI inflation. So we will have to see to what extent those divergences get corrected this time around.